Let's bring in now some friends to help you navigate through all this. That is RBC's Lori Calvasina. She just cut her S&P 500 year-end price target to 6,200 from 6,600. But is that maybe even too optimistic given all the, dare we say, uncertainty? Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets. She is on set. Jeff Kilburg, founder and CEO of KKM Financial and a CNBC contributor. Lori, good to have you on. I tweeted out something tongue-in-cheek a few moments ago. Okay, I've been listening to CNBC all day, and all we hear about is uncertainty. I've been doing this since 1996, almost 30 years. I'm trying to remember when I had certainty at all. Multiple boom busts, 9/11, multiple wars, global pandemic, you name it. How uncertain of a time is this right now?
So it's a great observation, Brian, and maybe we should be using the word angst instead of uncertainty. But I would say uncertainty feels worse when valuations are expensive and sentiment has been frothy. And while that's not exactly where we are today, that was the setup coming into the year. So I think we're still dealing with some of those residual effects right now. The other thing I would just say on the uncertainty point, I'm really eager to hear what companies say in this next reporting season, because in the last one, I felt like all I was hearing was uncertainty, 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 and not a lot of useful information.
But Jeff, I love, that's four loves, what Lori just said. Because you ever heard the thing like, if it's always somebody else, it's you, right? Lori just highlighted this is a stock market problem. What I mean by that is because we were valued at certain, almost priced to perfection, that adding any uncertainty is going to sort of kneecap the markets. And we're down, 5 or 6%. So how do you see things playing out from here? And how would you gauge the level of, quote, uncertainty we have right now?
Well, if we were playing a game in college and took a sip every time we heard uncertainty, Sully, we'd all be on the ground by now.
But drunk by noon, Jeff. Drunk by noon.
I think Lori is really correct and smart to bring up the fact that where did we come from? We came from back-to-back years in the S&P 500 of up over 25%. So to see this repricing, this revaluation of the Mag 7, it doesn't feel good to see the S&P 500 come down 10%. But I'm going to lead on Fed Chairman Powell here. I can't believe this, but I'm actually going to use his word transitory. He talked at the last Fed meeting about tariffs being transitory. I'm optimistic. I think we are overpriced to the downside here. I think the souring sentiment is providing an opportunity. And I'm not a contrarian, but I look at the VIX, just here at 2021, and I think people have overpriced or potentially booked profits. Maybe all this month of March, this March Madness, was more of a disguise to book profits from the last 2 years. So I think once we get some certainty tomorrow and get rid of our anxiety or our angst, like Lori said, I think the market has the ability to have a little bit of a 2 to 4% kind of rally to really kind of reprieve everyone's anxiety.
Lori, it seems like that's the message from the market right now, right? This whole week it's been almost saying, okay, we've priced in some of the worst case stuff, but is there uncertainty going to be resolved tomorrow? What if there's a phase-in? What if there's just, the next day break? And we have to see how all the trading partners react, and then if we react to them, I'm just curious.
No, I think that's a great point. The market sort of had a couple of days now where we've traded down and then we've shown some resilience and moved back up. So I think the market is trying to stay calm and take a wait-and-see approach, but there's still a lot of that angst under the surface. And I think you hit the nail on the head. I mean, is the uncertainty that's concerning markets going to be resolved tomorrow? I feel like the conversations 2 weeks ago were yes, the conversation over the past week is no. And I think that's really what's crucial for markets. The problem at this point in time, right, it's not the tariffs themselves. It's sort of that plus all the residual impacts, right? And the sort of uncertainty, the pause it's created in business activity, the potential for pullback in consumer spending. We don't have answers to those questions yet. And so I think, number one, investors want to know how much damage has been done. And two, are we going to have the potential for more damage if we don't dial down some of that uncertainty? So that's really what the market's struggling with right now.